Welcome to the full guide on how to get DSCR HELOC loans for your investment properties. Believe it or not, everybody's talking about DSCR loans, but nobody's talking about the HELOC version, right? This is a very unique product that we have that lets you tap into your rental equity without refinancing. I have many right now in process. We were beta testing and now we're fully releasing it, and it's a great product and it works tremendously well. So a lot of people are asking me, Ben, how soon can you pull cash out? What's the max LTV? What are the credit score requirements? Guys, I'm going to cover all of that right now. Here's what makes the DSCR HELOC so different. It's not a refinance. It's a standalone second lien HELOC, which means you can keep your low rate mortgage that you have now, your first lien, and you don't need tax returns. You don't need pay stubs, right? Only the rental income of the property. That's what really matters. The DSCR is very simple. Gross rent divided by PITIA. You need at least 1.0 or 1-to-1 ratio for long-term rentals. For short-term rentals, it's 1.15, right? So it's also available for short-term rentals. You can pull cash out without touching your first loan. It's really important. So let's talk about the seasoning rules, right? Because a lot of people ask me, okay, well, how soon can I take cash out? So they have some rules and stipulations with the DSCR HELOCs. If you just bought the property and you want to take cash out within 6 months of buying it, the max CLTV, meaning combined loan to value, is 65%. 6 to 12 months, it's 70%, and then the max goes up to 75% after 12 months. Okay, so if you closed a few months ago, you're leaving some equity untapped. So if you can wait, what I tell people, if you're not in a rush, let's wait. But if you are in a rush or the property's free and clear, you can go up to 65 LTV within 6 months of buying it, right? If the market is a declining market, right, your appraisal is going to cost you 5% in loan to value. Okay, foreign nationals, people that aren't citizens here, and LLCs are allowed, but the borrower must own 100% of the entity if you're buying in an LLC or if the property is in an LLC. Okay, Texas and New York are not excluded. I do want to preface that. So these are the two states right now we can't do this loan program in. So here's some of the core loan terms though. Minimum credit score is 700. Okay, some is 680 for lower LTVs. Loan amount, minimum loan is 75,000. Very important. So if you want to take a HELOC for 50, 25K, sorry, can't do it. Minimum has to be 75. The maximum is 500,000. This is how we set it up. It's a 5-year draw period, 30-year total term, 10 years interest only. Okay. So the first 10 years is interest only payments. You can draw on the money and pay it off as you go, right? For 5 years. And then the rest of the term, you're just making the full payments like you would a normal mortgage. Initial draw must be at least 95% at closing. So if you're taking out 100K, you got to at least draw 95K at closing. Most people just draw 100% because they'll take the cash right now. Once you draw that money, you're locked out for 90 days before additional funds are drawn on. So that's why people just go for the 100K for the 100% of the line, and then they'll wait after 3 months and then draw on it again. Okay, so let's talk about eligibility and property. So borrower and property eligibility. So it's good for up to 4-unit properties. So no commercial. Okay, no commercial. Up to 4-unit properties, single family, multifamily, condos, right? What's ineligible is manufactured homes, can't do mixed use, can't do non-warrantable condos, and of course, Texas and New York. Other key rules is you got to be on title before applying, no title seasoning shortcuts. Properties listed for sale get LTV reduction. So I see this happen a lot. Guys call me and they want to take cash out, but their property's listed for sale. So what we have to do, what I tell them is, hey, let's remove it, wait 5 days for MLS to update, then let's go apply for the refinance. Because if you do that and they see that it was for sale, they're going to have LTV reduction. So foreign nationals can qualify under the DSCR loan. LLC vesting is allowed if you own it 100%. Okay, no DTI, hinges on the property's DSCR. So I want to say, preface this too. Remember, you have your first lien if you have a first lien. Okay, if you're going to get a second lien, the rental income has to cover both of those. Okay, so works like any other DSCR loan. When we are qualifying, we use the lower of the actual lease agreement or the market rent. Okay, short-term rentals require 12 months of Airbnb history. You got to have a 1.15 DSCR ratio, so they're a little bit more strict. However, Airbnbs in some markets are doing very well. Okay, so we're not having problems with this. But if the lease shows above market rent, they're going to want to see 2 months of receipts or it'll be downgraded. So for example, let's say you get an appraisal and the market rent on the appraisal report is really low. What we can do, if your lease is actually much higher, we have to see 2 months of receipt. And then if we can show that to the underwriters, they will use your higher rental value. Okay, so I'll say that again. We'll use your higher rental value if you can show 2 months of receipt and not go off the market rent. Okay, that we've used to save some deals before. Of course, if you have a lease agreement that shows higher rent. So let's talk about credit and trade line history. Got to have at least 2 credit scores, 3 trade lines with 12 months history, right? No 30-day mortgage lates in the past 12 months, no bankruptcies, short sales, foreclosures. These are the timelines we want to wait for those people that have those situations. A lot of my investors are loving this right now because you can access equity without refinancing. Again, no income docs, right? Long-term, short-term rentals applies for both. Very big, not just long-term rentals. Great for scaling. And this is how experienced investors are building momentum right now in a tight rate market. Couple things to watch out for, guys, before we wrap up. 90-day draw lock after closing. Draw proceeds must cover closing costs, right? Can't bring cash to close. Lender cap exposure of 4 loans per borrower, or 1.5 million, and then not available in those 2 states. If you have any questions, I have access to over 4,000 programs. I work primarily with investors to help them scale, take cash out, right, quickly and effectively. And we'll even run a DSCR HELOC analysis for you. So if you have any questions, book a call below or send me a scenario via the email and we'll help you out. Hope that helps. Hope that was valuable. I'll see you on the next video. Thank you.